The Power of Long-Term Investing, a Beginner's Guide. Imagine for a moment that you began investing back in 1985. At first, your investments steadily grew, and everything seemed great until Black Monday. They're calling it the Monday Massacre. Wall Street suffered its largest single-day drop in history. The fallout will impact millions of people. At this point, your friends probably thought you were a financial wizard, but now they're urging you to sell. You resist their advice, and the market slowly recovers until the next big drop. The Nasdaq index is in free fall, down nearly 10%, led by tech stocks, fueled by the internet boom and subsequent bust. Investors and traders are in shock. Once again, your friends plead with you to cash out, warning you to take profits before it's too late. But you stay the course, and once more, the market begins to rebound. Then comes another major event. One of the most significant financial crises in generations. Little did you know, you were in for the ride of a lifetime. Then, the global economy is expected to shrink by 3% this year, the worst downturn since the Great Depression. At this point, it felt like the stock market might never recover. But as the economy reopened, the market rebounded by 27% from its low, reaching record highs. What a comeback! Here's the twist: that investor who began in 1985? Over this period, the stock market averaged an annual return of 11.23%. If you invested just £250 per month during that time, your portfolio would now be worth £1,841,521.08, a staggering return of over 6,000%. This is the power of investing, and now it's time to dive into the details of how you can start. Getting started, many people talk about investing but rarely explain how to do it. So let me guide you step by step. Before starting, make sure you have an emergency fund with 3 to 5 months' worth of living expenses. The first step is to set up an investment account. Although there are countless platforms and account types, it's much simpler than it seems, especially since you can now do it all online. When I began, I had to call a stockbroker to place every trade. Let's use the Trading 212 app as an example. The account you choose should ideally offer tax advantages. In the UK, that's a Stocks and Shares ISA, allowing you to invest up to £20,000 annually tax-free. In the US, the equivalent is a Roth IRA, though the contribution limits are lower, and you can't withdraw funds until retirement. Funding your account. Next, deposit some money. Most apps make this straightforward. For instance, with Trading 212, you can use options like instant bank transfer, debit card, or Apple Pay. Let's simulate a deposit of $400 to demonstrate how to invest in stocks together. Creating a strategy. Investments can be unpredictable, so it's tough to consistently pick individual winners. That's why I prefer index funds. They allow you to invest in a basket of top companies. Think of it like a music chart. The best performing companies stay in, while underperformers are replaced. With one click, you're investing across all 500 companies in the S&P 500, spreading risk. Automating investments is a great strategy. Investing £5 daily into the S&P 500. Over 3 months, his portfolio has grown by 5.03%. To set this up, you can create a pie in the app, choose your investments, like an S&P 500 fund, and enable auto-invest. Exploring individual stocks. Although beginners should focus on index funds, I know some of you will want to try picking individual stocks. There are 2 main approaches. Technical analysis, studying price charts and patterns to predict short-term movements. 2. Fundamental analysis, examining a company's financial health, leadership, and market position for long-term potential. For example, we take the fundamentals approach. When you invest in a stock, it's for at least 2 to 5 years. Making your first investment. Let's buy some Tesla stock as an example. On Trading 212, you'll choose between a market order, buying at the current price, or a limit order, setting your price and waiting for it to be met. We'll place a market order for £400. With that, I now own a small part of Tesla. Long-term growth, investing consistently, starting young, and staying diversified are key to weathering market downturns. Over time, the growth potential is staggering. For example, investing £250 monthly from age 25 for 30 years would grow your portfolio to over £1 million, even accounting for market ups and downs. Investing is one of the best ways to build wealth over time. If you want more tips on achieving financial freedom, check out my other videos. Don't forget to like and subscribe for more content to help grow your wealth.